Hey everybody, this is Jim at FreeChartVideos.com using time-honored techniques to understand modern markets. This video is for educational purposes only. It is not intended to be used as any form of investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own due diligence and make those investment decisions that are suitable for your financial situation. I'm not a licensed professional. I'm just a guy that draws lines on charts. So let's look at the S&P. Okay, the first thing I want to say is I'm not a huge believer in Elliott wave theory and some of the esoteric mathematical retracement levels to a large degree. But I think there's some interesting stuff going on here. I wanted to point it out. I've snapped this little tool here that is the retracement measuring tool. And I've started with the top of the right shoulder in our head and shoulders top, and instead of including this very bottom here, and I know that's going to drive the purist crazy, but you know that's what I'm doing. You could see that we had support 1, 2, and 3 places right at about 1120. I was expecting support there. As a matter of fact, when we were still in this pattern, if you'll remember, I said if we break through 1260, then I don't think we're just going to go down to 1160 or where the target was in around 1150, 1160. I think we're probably going to go on down and test the neckline of that old inverted head and shoulders that never got a back test. And that was back from about a year ago, about when I started doing these videos and started the website. So lo and behold, again, if we do not include this dip down here, which we probably should include, but just the same, it's interesting that this was just a one-time little hairpin turn, but here we had solid support 1, 2, 3 times. So what do we end up with? Some interesting things going on. If we let that be the 100% breakdown from the top of this pattern, then we end up with a 23.6 retracement level being very significant here as first support. Then once that broke, resistance, then it broke, then support, and possibly support again. What else is going on that's kind of interesting? Well, the other thing is that if we do a back test to the old neckline of that head and shoulders top, that would be almost exactly a 61.8% retracement. And the 50% we'll just have to wait and see because we kind of plowed through it. It gave kind of an initial support here. But there are a couple of other things that are interesting here on this 15-minute chart I want you to see, and that is this orange line that I've drawn as cleanly as I could over 1, 2, 3, 4, 5 tops before the panic breakdown from this pattern really began. And you'll notice oftentimes when moves occur out of a head and shoulders, a top in particular, not so much a bottom, but out of a top, the move will be precipitous and very swift. Now, bear with me, this might get a little lengthy, but I think it's important that we talk about a couple things. And one thing is, what are the implications of this top? Well, we have to look at it in the historical perspective. And that is that head and shoulders tops historically mean a significant change in directions of the market. Yeah, I have to keep that in mind. But there's kind of a double-edged sword, double-edged, not edged, kind of a double-edged sword here, because we do have this 7-month-long pattern, and it really does not seem plausible intuitively for me to think that a 7.5 month long pattern is going to fulfill its implication, and then the markets are going to resume as if nothing took place other than 2 weeks of heavy selling. That just doesn't make a lot of sense to me. I mean, it's like all of this build up for boom, okay, now we're going to go back up and set new highs. That does not seem plausible. However, there's another thing that is kind of interesting here that we have to kind of put into this mix, and for that reason, I think we need to become short-term traders at this point. And that other thing is the fact that this pattern has already exceeded its minimum downside expectation with that move to actually about 1101. And once it got past about 1160, it had exceeded that move. Now, what I'm looking at in the chart for short term is, and I'm sort of guessing here with this possible channel. I was talking about this orange line. This orange line is where things got turned back on Friday the 12th. And I'm looking at this line and I'm saying, this looks like this is setting up to be a battle between this diamond pattern and this line right here. This diamond pattern says we want to get over that line. And if you get over that line, then you have to say that's, at least for the very short term, a fairly bullish signal. And that would, at this point, I'm all cash, 100% cash. If we do that, then I would think getting over this orange line by a significant amount, more than this little where it popped up over here by 10 points. I'm talking about a significant move over that line, and then a pullback. You could maybe buy the move, but I would be more safe to buy the pullback. It'll probably be deeper. That I would take as a bullish sign that this rally is going to continue and possibly even get on up there and test that neckline. Now, I have drawn what might be a rough channel that the S&P could operate in, and I say it's rough because I don't have enough points to go on, and all of this down here is so squirrely. I'm just kind of looking at this, and it's like, I'm seeing what appears to be a lot of symmetry, a lot of mirror image stuff going on here. So I'm kind of working on that premise that that we might be getting a mirror image trade out of this bottom to where it's going to be like a V. And that is highly speculative at this point. And I want to also throw out that since I'm sort of guessing at this bottom, and then I made a parallel line and snapped it up here across this top, you'll notice this peak right here on the 10th does not reach that top, but again, with symmetry being in mind, neither did the corresponding move right here on the 9th. Once this develops a little bit more, we should know more. Unfortunately, by the time it's developed enough to where we can see what's going on, we're likely to already be up here where we're expecting it to come back down. So this is kind of what I'm looking for right now. It appears to me that this 1172, the 23.6 retracement level, is offering support. It was support here. Once it broke, it was resistance, a little bit of resistance, support, and now we're coming back potentially for another tag on that. Again, if you believe in symmetry, that would correspond to this move right here. So I'm looking at this as support. If on Monday we get down to that and it looks like the trading is kind of flat and there's no real impetus that looks like it's going to take it down, I might go long on a tag of that line with a stop that's going to keep me from from getting slammed back down to a new low. But really my first buy signal here would be breaking this orange line and then coming back on a back test of it. Now, I was expecting a back test of this line, never got it. And matter of fact, the call for Friday was down. I was thinking and I'm not going to bore you with all the details, but this little upward channel right here broke on Thursday at the end of the day. I thought that was signaling, some selling. Instead, what happened? We tried to get a back test on that line, but it's running up so steeply, it couldn't get back tested. Really, it never did get back tested. So I think instead we have likely entered a sideways consolidation, and if there's bad news on Monday, this could break and we could come back down, in which case I would expect support at this rising line drawn off this this extreme bottom, and then this point on this triangle pattern. So if there's bad news, if something happens over in Europe and our markets open down, if it looks like we're going to bounce on this line, then I would say that would be a good buying opportunity. Again, protect yourself, because this is really screwy stuff going on now. If so, get slammed down to this line, buy with stops. Get up over this line, buy on a pullback to it. And I think that's the thing right now. I would not at this point short this market. Once we get on up and we start getting into this neckline area, I would expect very strong resistance. And at that point, I think a short is almost a no-brainer. But for right now, we closed right absolutely in the middle of and I'm calling this hypothetical channel here and here. And that being the case, I am, and also we're right in between this potential support area and this potential resistance area. So I'm in cash. I'm waiting to see which way this goes. Look, I hope you've enjoyed this video. I could bore you with all kinds of inner workings of this chart, but I'm not going to do so. I just found this very interesting, that the Fibonacci stuff seems to be working somewhat here, and I've seen it work in other places too. I just personally I have a hard time trusting it to the point to where I would say, oh, we're at the 23.6 retracement, it's time to buy. I have a hard time with that, because I've seen analysts make calls like that have failed miserably, and I don't want to do that. I'd rather draw lines. And so anyway, I hope this is of help to you. Sorry we didn't get our dip down to the 1140s like I thought we were. That was going to be a sweet thing if it happened, but it didn't. And if anything, that shows me the market's got maybe a little bit more bounce in it. Like I said, sideways, get over this line, buy, tag this line, buy, but protect yourself, because this is definitely turbulence in the markets. And thanks again for watching. I hope you'll come over and spend a little time at freechartvideos.com and look for these daily updates. Oh, by the way, this upcoming week I will be traveling, but should have an opportunity to do an update from my laptop on the road. But it won't be in HD. It'll be kind of crummy, and the audio will be terrible. But I think I can still make lines. Take care.